Hello, everyone, and welcome back to this week's episode of the Rosa and Rubini podcast, Making Sense of This World. My name is Manas Chavla, and as always, I'm really pleased to be joined by CEO and Head of Research Brunello Rosa. This week, we're discussing China and its needs to provide more fiscal and monetary stimulus to avert deflation. The Chinese economy has been in a concerning place for global investors for, perhaps quite some time now, and we've discussed recently its sort of the extraordinary performances, financial markets, and how a lot of that was actually led by the stimulus package introduced by Chinese authorities recently. So, Brunello, could you just unpack that very quickly? What was that sort of stimulus package? What did it entail, and why did it come precisely with this timing?
Yeah, as we know, China has been in a slightly difficult place from an economic perspective for the last few months at least, but in reality, probably dates back to the post-COVID era. And also because the government has refused repeatedly to implement policies to support aggregate demand, both cyclically and structurally. In part because they were too busy, so to speak, cleaning up the mess in the housing market and so on. Eventually, they kind of realized that the performance of the economy was too weak. Achieving 5% goal for this year, real GDP growth, would be challenging. Inflation is effectively negative territory for some times. People call it deflation. Let's say it's at least disinflation. And therefore, just before the October 1st National Day in China, they implemented at the end of September a few measures. At least they announced them. As a result, the stock market, both in mainland China, Shanghai, and also Hong Kong, rose substantially, effectively making up around 30% of the entire yearly performance. Um, what was those measures? Those measures were, first of all, on the monetary side, the PBOC cut the 7-day reverse repo rate by 20 basis points from 1.7 to 1.5, and most importantly, a cut of 50 basis points in the required reserve ratio, RRR, as it's called, for the vast majority of banks, just those who had already 5% RRR will be affected. That measure alone was expected to inject at least 1 trillion yuan worth of liquidity in the market. Then, if you look at the fiscal measures, there were a number of measures introduced to prop up the banking system and especially those banks that had supported companies operating in the real estate sector. The government also aims to replace some hidden local government debts with some more transparent liabilities, try to ease in some of the fiscal pressures at local level. And also there was the issuance of several trillion worth of yuan of special purpose bonds to help again the property market, the banks, and also those families that have tried to access the property ladder. So this was the package announced at the end of September. And then the market was expecting some form of confirmation of that. But that never really materialized when the National Development and Reform Commission met in mid-October. Whatever they said was kind of a reiteration of the announcement. There was lack of detail and so on. And so the equity market that had performed so well actually crashed, so to speak. Experienced the worst fall in 27 years. Half of the gains that were made in late September were wiped out. So, increased volatility and so on. In a nutshell, the Chinese authorities have made an announcement, didn't follow through. The market liked the announcement, but had to sell on the fact, as as the old saying markets, buy the rumor, sell the fact, it clearly applied in this case. But we think that eventually Chinese authorities will have to follow through. The, the country economy is really suffering, not on a structural basis. We know China has grown massively as now the second largest economy in the world. It aims at challenging the US as a global hegemon, so to speak. So, on a strategic perspective, it's still on that path, but on a short-term basis, it's clearly suffering. So we think that eventually Chinese government will follow through with their announcements.
Yeah. And just talk a bit more about that. I mean, do you think this is then therefore more likely to be a temporary hiccup in economic or monetary terms, especially if, you look at the warning signs posed by what Japan's economy was up to in the last sort of 30 years? What can China learn from that?
Yeah, absolutely. In our view, this was a bit of a hiccup, a bit of a mishap by the government that, they're not totally used to deal with market forces. I mean, even in the most developed financial economies, such as in the US, in the UK, and so on, financial market are surprised by some of the policymakers' announcements that, sometimes take for granted things that are not. And communication is measured at the end, not at the beginning. So what the party thought was announced and reiterated, and therefore should make the market happy, reality wasn't. But then we know that the Chinese Communist Party is very attentive to what happens at population level, at market level. If they made an announcement, eventually they will implement those measures, and probably more, trying to surprise on the upside when and if possible. But here, as you said, by far the vast, much larger, I would say, challenge is try not to repeat the mistakes that were made by Japan. In a nutshell, what happened in Japan is that after the Plaza Accords that were aimed at lowering the value of the dollar and increasing the value of other currencies, including the German mark and the Japanese yen, the strong yen caused a stock market crash, and in particular a real estate crash. At the time, the problem was not the buildings or the dwellings were actually land prices that collapsed. And with that, a very prolonged period of deflation started that has lasted easily 2, if not 3 full decades. And only now Japan is starting to recover from that. So, 30 years of deflation is a big story, and they had to experiment all sorts of policy measures to overcome that, especially on the monetary policy side. China might follow on the same path, and if you look at some charts that some analysts have put out there, the similarities are striking. And by far, the most important and relevant issue here is the decrease in the Chinese population, which has peaked around 1.4 billion people and is now in decline, because eventually the law of one child has had the impact that was deemed to having if it's been removed 2 or 3 years ago. It's too late for that. And now, even if you try to convince couples to have more than one child, like in all Western economies, it's very hard to get to have more than one child, because then you need to provide social care, child care, and all the rest of it. And it's very hard to have. So population decline is set to continue. And when you are in population decline, then deflation is the obvious consequence. So you start fighting a much more difficult battle every year to avoid prices to fall. So, somebody says that inflation is like the coffee you get in the morning. Is that one incentive that you have to wake up, do something, because otherwise, eventually, inflation will erode the value of your money in your bank account. So if you do nothing, eventually we'll end up with nothing, even if you have large savings. So inflation is that little bit of a clock. Imagine deflation is the opposite, is kind of an incentive not to do things, because things would be cheaper tomorrow than they are today. So it's kind of the biggest disincentive to do things. So this is an even harder battle to fight, and central banks know very well. They can rein in inflation. We saw in the last 3 years quite easily. They can always increase interest rates, but beating deflation, bringing inflation back into the system is even harder. So this is what China is facing, and I think they will be mirroring this kind of situation for the next few years, and that would be the biggest fight for them, the biggest battle to fight.
Yeah. If inflation is your coffee in the morning, perhaps deflation is the drink in the evening that mires you to complacency to do little else. Uh,
Absolutely.
so excellent. Thank you so much, Bruno, and thank you so much for your time and insights. Something we'll continue to watch for many weeks and months to come.
Thank you. Until next time.